But the first rates Monday morning on your screen, 45 points higher for the Nifty, 150 points higher for the sensex. IndusInd Bank, Maruti, Hindalco, Hero MotoCorp. Not too many companies came with numbers over the weekend, but the ones which came out with numbers, two. IndusInd Bank had to bounce back because the market reaction, I think, frankly, was overdone on Friday. Britannia is the one where numbers have been strong, commentary has been decent, margin expansion has been decent. Paytm, now it's flying. They continue to deliver, they continue to promise that we are very clear that we will be like any other company which focuses on cash flow. And the growth, I think, is just organic. I mean, they are they are not at the cusp of a high growth, but they are now really demonstrating that what this engine can actually do. 29 rupees higher for Paytm, 718 rupees. Let's also look at Zomato, Marico. Zomato, why? Because over the weekend, a lot of social media was talking about the impact of ONDC on food delivery, so I think that's having an impact on the stock per se, which is at 64 rupees. And then HDFC Bank and HDFC Limited, the real whipping balls on Friday because of the Morgan Stanley implication, because MSCI implication, I beg your pardon. 10 rupees higher for HDFC Bank, which is bouncing back, and for HDFC Limited, post numbers, the bounce back I think is slightly better.
Let's see what IndusInd Bank is up to, because the market was a little spooked about that move on the stock price yesterday, or rather on Friday. R. Mayappan has resigned as the CRO and Sachin Palange has been appointed as the COO. IndusInd Bank has seen a massive recovery this morning, almost headed in for a 4% gain. Britannia, the big stellar performer in terms of earnings, the margins have come in at almost touching 20%, managed to post a good beat, 1.5% higher for Britannia as we speak right now. Marico as well came out with its numbers, which have largely been in line. The domestic volume growth stands at 5%, so it seems like it was a very Dabur specific story, because it clearly hasn't rubbed off onto Marico, which would be, I guess, the closest peer. Marico has gapped up 8.25% as we speak right now in trade. There's ICICI Lombard, there's Paytm, there's DCB Bank, Sundaram Clayton. They've all come out with their numbers, so look out for all of them. As has DCB Bank, by the way, wherein the NIMs have come in at a 22-quarter high. The operating profit is up 26% on a sequential basis. DCB Bank gaps up 5% as we speak this morning. There's also Star Health. The market share has come in higher by 21 basis points. The April premiums have come in higher by 25%. 605 is where that stock stands. And then, of course, there's Ather Industries as well. We just highlighted the numbers to you. The revenue has come in higher by 25%. Margins as well have seen a fair amount of expansion. Ather is holding up now around that 1,000 rupee per share mark. There's Lupin also, which has made a small acquisition of about 165 odd crore rupees. There's Thermax. They won a 272 crore rupee order, so look out for that stock as well and what it does in trade. And then, of course, there's Hampo Sugars as well, which has come out with a decent set of numbers. So that's another stock which is in focus also this morning. US FDA has now said that Mohali unit for Sun Pharma is not operating in line with the consent decree. So my sense is there would be a negative reaction on Sun Pharma this morning, down 1% as we speak right now. Coal India came out with its numbers. The blended realizations have come in higher, but the EBITDA has come in much lower than what the street was anticipating, 2.5% lower for Coal India as we speak. There's Piramal Enterprises, which has come out with its numbers. Adani Gas, Adani Transport as well in focus. MSCI looking to reduce the free float in May review meeting. And a couple of other numbers, Alembic Pharma, New India Assurance, Tattva Chintan, they've all come out with a bit of a disappointing set of earnings. But where is the index settling in at? Not seeing a bad move actually, about a 0.5% uptick and a very stock-specific result-oriented take on it.
Yeah, it seems to be an okay day for the indices. At least we've recuperated on the Nifty and the Bank Nifty by margin of 30-40% approximately from what we lost on in terms of the respective gains. The stock which I would look to trade in the open would be on the mid-cap front in Havells. I think it's a very strong chart. The last 3 or 4 days, the stock has done exceptionally well, moved from 1200 to now nudging towards the 1300 mark. So it looks attractive for at least another 80 to 100 points on the upside over the near term.
enough, Norresh. Let's find out what's looking attractive according to you as well, as we're checking in on the first rates at around 18,160.
So that would be a buy on Ambuja Cements. The stock is sustaining above the 400 mark. Has an upside towards 440 as a trade, keeping a strict stop loss at 390.
Mark, RVNL, that's just been this crazy stock of last 1 month. And today it's falling prey to some correction. 142 suddenly has become 136. So RVNL is on a decline. And before I look at intraday decline, last 1 month, one low, 85% higher. 85% higher for RVNL. They become Navratna, that's about it. But there are crazy moves which are there in some of these, the railway stocks now. What was like an ugly duckling now suddenly is trading at a Humpty Dumpty valuation. Year and a half ago, everybody thought defense is the only way, railways will not do well. But allocations for railway, every budget has gone higher. But some of these companies again run projects which are long gestation project, which is that you get the order right now, so the order book will look bloated. But the execution timeline for some of these railway companies is that 3, 4, 5 years. RVNL does get a lot of business from consultancy, but that's also a long gestation project. So you got to just be slightly careful. The long-term picture for railways defense is great, but 75%, 80% higher in the last 1 month, you could ask yourself, wow. Because when these stocks will reverse and they are not institutional dominated stock, you will see them, the fall will be higher than the rise. That much I can guarantee. I'm going to change gears and connect